What's up, guys? It's Eric here. So what we're about to do here in this video is kind of go over pretty much a couple of trades for this week. Let you guys pick my brain a little bit so you can kind of see how these trades are going, because a lot of you guys, typically ask the same questions or just want to kind of get a better sense of things and how it's going, how I'm looking at the trade. So it'll help you be able to execute maybe your trades a little bit better, or even just be able to find your niche that'll help you execute your trades you know to a better goal that you're looking to do. So this video here is going to be kind of long, but very detailed. I'm going to kind of go through it like step by step and give you guys like my ins and outs of what I'm picking and looking at in stocks and what's causing me to choose this stock versus that stock. What am I looking for entering the stock, and what I'm looking for exiting the stock, things like that. So also, I'm gonna probably give you a little bit of tips that'll probably help you with, your positions as well. Because some of the stuff works different for different traders. But this is gonna be a good video. It is Saturday, July 31st. The month is over, so hopefully you guys had a good month. I did last week. This past week was kind of slow. Wasn't much for profit, a couple grand, not too much. I only traded like 2 out of the 3 days I was there anyway. But looking forward to August. It's coming around that time where things are going to be picking up a lot more in the market. Normal market cycles, if you experience, you know the rules and know how it goes. If not, sit back and enjoy the ride. But there's definitely still opportunities there for you. So make no mistake about that. Before early February, March, you could just, throw a dart at the dartboard and make a profit. But now, it's where your skills come into play. So pay attention to this video. It's going to be a good one. Big changes coming, especially for the month of August, so you guys look out for that. But without further ado, let's get into this video and get into this lesson. All right, stay green. All right, guys, let's go ahead and get into it. I want to make this as quick and detailed as possible because, again, it's Saturday. I actually could be back on the golf course like I wasn't earlier, but instead I'm in here, came home to rush and teach you guys. So hopefully you get some good stuff out of this for us to move on and move forward next week and make this worth my Saturday. All right. So I'm going to go into a lot of detail here, answer a lot of the questions you guys had in the chat rooms and stuff like that. Try to do it as much as I can possible. So we're going to kind of work backwards from the trades that I took. I'll start with like AHPI, go into the, EYRP, which is on the watch list. Give you my thought process of what to look for and all that good stuff, and what I look for, what makes me decide to get in and get out, all that good stuff. Okay. Understand this, guys. When I go over this stuff and how I'm thinking in my thought process, this stuff is pertaining to me and my trading strategy and how I trade, okay? At the point that I'm going over this stuff, if you had no idea what I'm talking about when I'm mentioning something, one of two things. One, you probably don't need to be trading like I trade. Well, you shouldn't be doing that anyway. But one, you probably shouldn't be trading at all. Two, you haven't studied enough, or you haven't had a strategy set up because you have no idea what I'm talking about. When I mention this or I mention that, if you don't know what it is, go read the book and do all the studying in the Learning Lounge and get all that stuff out the way, because you're going to need to know that in order to do this correctly, or just to come up with a strategy correctly, okay? So let's get into the first trade here with AHPI. All right, so some of the questions will be covered here real quick. Like John asked me what my thought process was with cutting losses, what I do when plays fall apart, things like that. As Scott asked about, finding some all-day runners like the AUPH alert. I know Carolina was saying that she kind of finds herself, getting stopped out during trades, stuff like that. So I'll address all those questions here. I'll kind of touch on some of it, recapping these trades. So I'll only do like maybe 2 or 3 of them at the most. So that'll give you a little bit of insight. Then I'll go in and I'll directly answer those questions for you guys, so we can keep killing it. All right. Because watch list is there. I'm giving you guys every tool in the book to make yourself, profitable throughout the day. You just gotta know what you're doing and then practice, develop a strategy. There's only but so much you need to learn when it comes to day trading. It's kind of like playing, if any of you, play team sports, stuff like that. To be good at day trading, let's, for example, say
you're on a football team or any team, whatever, any team sport, right? And you play a certain position. All you need to do is focus on playing your position. Great. You don't need to worry about, like, if I'm a tight end, I don't need to worry about you know being a great running back. I don't need to worry about my footwork and all that good stuff. I mean, you probably should, but anyways, I'm just kind of being overall general. You'll get the idea. If you play a certain position, you need to focus on being great at that position, and that's what it comes to trading. I'm not trying to trade gap and go, trades. I'm not a scalper like that. I play a certain strategy, a certain setup that works for me. I usually have three main ones that I do. I have, a few more because I'm more of a bullish trader, so I have more trading strategies for when a stock is going up. I got a few for when stocks are going down. And I have some for, when a stock might be trading sideways. Do you need that many? No. You need to start out with knowing one strategy, focusing on that strategy, and trading that strategy over and over and over and over and over. Don't worry about the money. The money's just going to be a result of what you do great. Okay? So you're a tight end, worrying about playing the tight end position. Don't worry about trying to be a running back. Don't worry about trying to be an old lineman. Be a tight end. All right. So let's just kind of look at this one. AHPI, the alert went off. Let me see if I can pull that thing up when the alert went off. Uh, Alert went off at like 6:45, which is like 9:45. So like 15 minutes after the thing opened up. Oh, let me pull that back up here. Sorry about that. So pretty much like 15 minutes after the alert went off. See if I can pull it up here. Yeah, AHPI. Boom, boom, boom. Let's zoom in here. Now, my thought process for entering this trade is pretty simple. Now, there's a few things you guys should know when you're trading. Well, you don't need to know, depending on your trading strategy and how you trade. What I need to know is a few things. When I enter in a trade, my thought process for entering a trade, it's got to be a few things. I need catalyst. I need a reason to get into the trade. That could be news, what have you. It could be a lot of different reasons why you want to get into the trade. I actually go over the list of reasons to get into a trade in the course. It's like 7 or 8 different reasons that I look for. I only need 2 to 3, 4, maybe. But usually between 2 to 4 reasons to get in a trade. I try to do no less than 3. And in this trade here, obviously what I was looking for was volume. Great. So that's going to be a reason for me to get in. The alert went off. It's telling me that there's movement there, so I'm going to look at it. I need to see good support. I need to see, news, something like that. Those are things that you want to look for. I want to look for signs in the indicator that I should enter this trade that is going in the way that I'm trading the strategy, which is, if it's a bullish strategy, is going in the way that I'm thinking that it's going to go. And all that stuff is going to be coming from you developing a trading strategy. Now, let me take a step back because this is important for a lot of you guys when it comes to alerts. If you don't take anything from this video, take this. Never jump into the alert when it first goes off. I repeat, never go into a trade when the alert first go off. You see this trade went off at when it hit 7:45, right? I didn't get into this trade until it was like 8:52. Okay, now granted my account is probably a little bit bigger than most of you guys, and I have more tolerance for risk to reward ratio, and that's up to you. I don't need a big percentage gain, even though I end up getting sometimes like 15-20% gains. That's fine, but I don't need it. Usually that's because I'm letting it ride, which is a little bit more of an advanced strategy for those of you who don't really know how to do that or took the course. You don't really need to learn that. That's just going to confuse you. But I can tolerate a little bit more than what you can. You need to find your risk to reward level, okay? Whether it be in cents or whether it be percentage. If you're shooting for, and don't go crazy with it. Don't be shooting for like 10 to 20%. Yeah, these stocks run that far. Yeah, that's great. But you shouldn't be aiming for that. It could be 3 to 5%. Imagine doing 3 to 5% day after day after day after day after day. Eventually, your account is going to grow. Look at the compounding video that I sent you in the Learning Lounge if you don't know what I'm talking about. But back to the trade. My idea and reasons of why getting this is because it fit my trading strategy. Again, the alert went off 7:45. I didn't get into it until about right here, like 8:52ish, right? Now, you guys know me. I need to see some type of pullback. I'm anticipating some type of pullback before I'm getting out, right? So I know the moving average convergence divergence is going to go over. That is like one of the key things I look for. When an alert goes off, I know it's going off because everything is green, which means it's giving me high relative value. I'm not going to cover support and resistance on this because clearly there's not much support or resistance, and I'm not going to go back that far and look at support and resistance for this stock. For one, there's God no reasons why it might have ran and had support resistance during those days. It's good to know it, just kind of off your brain. The alert goes off, pull back, look at the time frame. Okay, what has it done in the past? Does it normally do this? No, this is abnormal activity. I'm going to watch and see what it does here. So you wait. You wait. The reason why usually what I do, guys, is wait for some pullback on the moving average convergence divergence to hit right here, right? Why didn't I wait for it on this one? It's part of one of my strategies because the reason for me to enter was greater than the reason for me to wait. Okay, and I'll show you why. The reason why is because when I look at this trade, this right here, see that free float is 2.99 million. If you don't know what that is, go do some research because I'm not about to explain it here. But anyways, it's a low float. Low floats mean a lot of movement. All right. So when a stock is a low float stock, is getting a lot of activity, and it's a, to me, low float is like 5 million or less, 10 million or less. I need to run into that thing right away because it's going to quickly move. But you're going to know the same time that it's moving, the same time, the same speed it can actually pull back and drop back down to where it was at for one reason or another, unless there's a catalyst or reason for it to kind of stay where it's at. So for me, I got into this thing at 852, and I already knew right here, like, hey, this is going to be some pullback. So to me at this point, I'm going to set like my resistance, my level of tolerance. I'm willing to let it go to maybe 7. I'm not waiting for it to come down to the bottom. I'm willing to let it come to right here, this level of support. Okay, because remember I entered in right here. Let me, because this will confuse you if you don't understand how to look at it in real time. Like, hey, alert goes off. It went off at 7:45. Okay, great. It went off right here. It already kind of formed a little cup and handle right there, and the moving average convergence divergence already went red and it turned green. Since it did it that quick, I'm saying, okay, this thing is going to possibly run. I don't know how long it's going to run, but it's going to possibly run. Got in at 852. Now, I know that I'm entering on green, so I'm expecting pullback, but I'm expecting pullback to be no longer than this. The reason why I didn't get out is because I already had a set strategy in place, have made up my mind of support and resistance. By then, you should probably know how much shares you're going to go with, whether it be 10, 20, 100, 1,000, whatever you want. Okay, I usually change with the same lot, which is usually like 500 shares. There it was. But anyways, stock went up, went up. Okay, there's no pullback yet. I'm like, okay, that's great. Then it started to roll over again. It's still trending up. It's still trending up, right? Now I'm expecting some pullback. So eventually a pullback has got to come. It's got to come. So there it is. Red, 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 red. Broke VWAP, broke EMA, broke everything. I'm like, man, okay. So since I got in at 852, this thing is already down to 879. It still hasn't hit my resistance level, right? So I'm okay with letting this ride. What kind of alarms me a little bit is this area right here, small moving average convergence divergence. I'm like, okay, it's getting a little tight. So I got my finger over the button to get ready to sell. Then it just drops off again. So right here, this is kind of giving you a bunch of sell signals, right? You even got the super trend to sell. You're getting candles to sell. I mean, everything is saying that it's in the red, right? You would think, okay, 852. But knowing my strategy and my resistance level, I'm willing to wait it out. So as long as it's not dropping below this, I'm not going to stop myself out, no matter how bad it looks. Why? Because that was part of the plan. Why would I break my plan? Why would I break my strategy? Doesn't make sense. But anyways, it's a good thing I didn't, right? Because look at this. As it rolled over, I said, okay, this part right here kind of alarmed me because it showed resistance. And I'm like, oh man, that might be the top. So I'm considering, and this is at 9:10, guys. Remind you, I got in at like 8:52, right? 8:52, 9:10. I'm thinking to myself, okay, should I take my hits and move on? Nah, I'm okay. If that's the top, if it tests that top one more time, it doesn't break through, then I'm gonna go ahead and get out. How do I know it's got to test the top? Because that's how the stocks work. Remember in the course, you guys, I tell you that these things come in waves, and the moving average convergence divergence kind of gives you that wave. If that wave is moving up and still going down, then you kind of know, like, hey, I can kind of stay in this. It's still trending the way I thought it would. I'm kind of getting ahead of myself because you don't know what I'm talking about if you haven't taken the course. But anyways, there was no reason for me to get out this trade because it did not hit my level of support that I had, which was kind of a big level of support. Another thing is, if you find yourself like, hey, I can't do that much resistance, like, oh man, I'm going in with 100 shares at $8, that's 800 bucks. I can't wait for it to drop down to $600. Guess what you need to do? Lower the amount of shares you're trading with. Okay, I tell you guys that all the time. If you can't handle that risk, either lower the amount of shares that you're trading with, or find a better entry and exit point. That's just it. There's no way around that. So back to the trade. Okay, so I didn't let it, I didn't let it freak me out right here because it didn't hit my level of resistance that I was going for. But it finally broke out right here, so I got excited. I said, okay, that's great. It broke level of resistance, and then I held this thing pretty much until the candle right here. Why? Because I figured that this test right here was kind of, a warning sign that it's not going to run too much. Because if that was the case, it would have broke beforehand, but it did. So I ended up getting out right at this candle, which was perfect because it kind of got right. It got, it began to trend down right here. I mean, it still has some good levels of support and resistance within a range, but I wasn't going to wait that long on a Friday. That's nothing you got to consider, guys. The market was already red this week. It was red on Friday. I mean, it's a lot of other moving parts you want to consider, not just charts, not just support and resistance, not just your strategy. It's a lot of different things you want to consider. And I put all that together in that little thing. And day after day after day, you need to focus on one part, one part, one part, one part, or week after week, however long it takes for you to focus on that part and start putting it all together to formulate a strategy of knowing what to trade. That's how it works. So I got out right here because I knew that the test was right there and it failed on this toughest green and it failed right there. So my chance to get out was perfect right there because I assumed it was going to be green and it did. And I got out with a great profit, 990, which was perfect. I mean, it went all the way to like 10 something, which was fine. Not good risk to reward ratio, but my reasoning for getting out was greater than for me to try to stay and get greedy because this thing has already told me not once, not twice, not three times that small float of a stock that it is on this Friday in this red market, it is not going to go too far. Okay? I mean, that's just my reasoning to get in and get out. You got to look at all that and consider all that. And you won't know this stuff day one or day two. You got to go back and review your trades, guys. Know how you trade, understand your tolerance, and practice that too. But it's not just going to be, oh, a candlestick showed me this. It's not going to be, oh, the indicator showed me that, because you can see there's false signals everywhere. Look at that. For example, the sell signal was saying, hey, this thing is about to drop off. It's going to be trending down. That's what a super trend is telling you, like, hey, this thing is about to trend down. But look at that. It only went down like a couple of cents, not much. That's why it was better for me to stick to my strategy of support and resistance, which I did, even though these things are telling me, hey, I need to get out, I need to get out, I need to get out. But I'm like, why? I'm only down $1, $100. I got in at 852. It only went down to, it didn't even get to 750. But if it would have, I would have started to get worried. Once it started, so I'm like, okay, I might need to take my hit, but I didn't. So that's AHPI. Um, what other one? Oh, EYRP. Let's look at that one here real quick, guys. Let's do that. ERYP. Oh. Now this one was on the watch list. I'm not gonna lie, this one kind of had me worried. Let me pull it up here so you can see it. I had it on the watch list. Blah 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 blah. That after hours move that it did yesterday to $22 had me like, whoa, okay, okay. But it ended it halfway through. So I thought, okay, that's pretty good support and resistance there. Not too shabby. If enough eyes get caught with it, come pre-market and things like that, that it might be worth, looking at, right? So you guys, probably had that on your eyes too. And I think I had posted in the group, not in the group, but just in general, on Facebook. Let me see if I can pull that one up here too. Because I was in that bad boy early in the morning. Got out. Let me see if I can pull it up here. Just a second. Why didn't my stuff show me in chronological order? But that one was a good. Let me just pull it up here. We can just look at it here. All right. EYRP. This thing was crazy. So this yesterday is when it shot up. It shot all the way back down. I mean, the thing went down to $5. I mean, you got some diamond hands if you held through all that, you know? Uh, but anyways, that one was a pretty decent trade during pre-market because of what it was showing. Um, Thought process on entering that one was pretty simple. Like I said, I was already watching it and it displayed the pattern. So guys, a lot of times we got a catalyst, right? It came off of a good level. You know, it was at $10 when it closed. This thing dropped all the way down. I mean, to like $5 to $7. That's pretty much where it started out before it happened. Like, remember, before the after hours, it was like down here. So you got that as a good level of support. Let me see if I can pull up when I entered in that one, because again, it was a good trade. Let me see. Yeah, so I entered this one at $7.80, 81 cents. Got out, had like 11% gain. So let's look at this one real quick. What do we know? One, it's on the watch list. So you wake up at 4 a.m. Eastern time or 1 a.m., which is, typically a lot of times my time when I'm not traveling. First thing you know is not to, of course, be in the stock, because if you're a day trader, you should be in and out of your positions. In and out of your positions. You do not hold it overnight. No matter where you're at in your position, you get out, whether it's with a loss or with a gain, you got to get out before the end of the day. Before the beginning of pre-market till the end of after hours, you need to be closing that position, whether you profit or not. Okay. Let me get rid of that. So, boom, it opens up, pull back, pull back, pull back. And if you're looking at level two, which you should be doing, especially during pre-market, remember pre-market is a totally different monster because you only get limit orders. Not only that, but a lot less volume happening in pre-market than it would be during the day. Sometimes, um, for the most part. Pull back, great, great, great. Buy signal, great, great, great. The reason why I didn't get in until like 780 is because that's when it started to show that power. So look at this. That's when the volume spiked. 401. The crazy thing is, guys, you kind of can't even count this as an alert, really. I mean, because it was already on your watch list the night before. I told you guys, look at this in the morning. Look at this in the morning. Then it was alerted to you, hey, it's spiking. Look at it. Don't play it. Look at it. You want to take that gamble and jump into a stock, you can. I'm gonna show you guys why I don't do that. But boom, spiked up. All right, we got some pullback. Pullback. Moving average convergence divergence has changed, right? Okay, I love to see that. Guess what? It started climbing. So I got in at 780. Level two was still looking good. There was no reason, you know, to get out. In pre-market, I'm watching that really, really heavily. During the day, sometimes it's kind of harder to see because it's moving much more faster, but you can still see it. So I held this thing all the way to the opening bell and got out. The reason why I got out is because one, it's Friday. I knew there was going to be a bunch of sellers. I think this thing got halted too. I'm not sure, but probably got halted down or something like that. But yeah, pretty much held that thing till it wasn't no time to hold it anymore. 7:15, I believe, is when I got rid of it. A little bit after. So let's take a step back. Reason to get in this trade: huge Greek candle, cross VWAP. If you know what crossing the VWAP means, you know why that's a good reason to get in. If you don't know what it means, maybe how to day trade for a living with Andrew Aziz will tell you, or what's the other one? It's another marketing one. But anyways, read them books. If you don't know what that means, read the books. But that's a good strong indicator for me to get in. Indicators looking good. Why should I not get in? Everything's holding. Okay, I'm gonna get in. No reason to exit, even though there's a sell signal here, long red candle here. Should I have dumped? Not really. Why would I not need a dump? Because the relative strength index is showing me that it's at the bottom. So I can wait for a little bit of turn up for it to go back up. I want to sell into strength, not sell into weakness. Why would I want to sell when it's getting weak? It has to turn back up. Now, how much it turns back up is going to be an indicator of if you're going to want to stay in a trade or stay out the trade. I know this was pre-market, so I wasn't in a rush to sell it because volume would pick up. People are still going to see that this thing spiked up yesterday after hours and is still up again the next day. So buyers are going to come in. Psychology behind trading, you need to understand that. One of the part of the reasons of why to enter and exit, this is a lot of stuff to be thinking about and seeing when you're trading, guys. This video is a lot longer than I thought it was going to be. But anyways, there was no reason for me to sell because of the fact that it's still pre-market. Um, the indicators are saying that this is weakness, but why sell into weakness? Sell into strength. The moving average convergence divergence is going to give you every answer. Relative strength index is going to give you every answer. Candlesticks aren't going to give you every answer. Sell signals aren't going to give you every answer. I don't know what to tell you. Price action level 2, that'll tell you a lot. I'm not going to give you every answer because you could get faked out in level 2 orders as well too. But I wish I could do that in real time for you guys too. But there was no reason to exit this. Excuse me. Stuck to my strategy. It didn't break VWAP. Usually I get worried when it breaks the VWAP and it stays down there for a long period of time. Once it broke VWAP and it stays down and the moving average convergence divergence is rolling over twice and it's still underneath there, points like that, I'm like, okay, just go ahead and cut it. But rarely does that happen for me. That's why you guys see I'll execute like one trade or one trade, and that's it. You see my losing trades, which is very rare. I mean, I might do it once out of a week, I say, once or twice a week, maybe the most. But it's because I'm picky with my trades. If I don't see the setups I need to see, there's no point in getting in. And these stocks do this over and over, guys, and you'll get the hang of it and get used to it once you start seeing it. Like, oh, I know that stock. I know this stock did this last time. Blah 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 blah. I know my strategy. I can do it. I know the psychology behind it. I'm gonna do it. It becomes easier and easier. But also too, if you look at it on the the other minute chart, like I tell you guys to do, that helps too. I need typically when it comes to getting in and out of a trade, I need to have confirmations out the wazoo. Other than the fact that I already hit my target. If I hit my target, I don't even know other reason. If I hit my target, I'm like, okay, boom. I'll let the less ride and get out when I feel like just getting out, which happens quite a bit. But if you're starting off, you need to have a set entry, set exit point, support and resistance, and you need confirmations of when to get in and get out and reasons to why. Again, you should have a 1 minute chart like this, a 5 minute chart like this. Why? Because what is happening in the 1 minute, oh, it's going red, it's going red, might not be happening here in the 5 minute. The 5 minute is telling you, hey, this thing is still uptrending, where the third minute within that 1 minute of that 5 minute is only saying, hey, I'm just going down a little bit, and you might get stopped out here, because you're like, oh, it's not doing anything, it's not doing anything. You might feel pressure that it's not doing anything. Whereas if you would have looked at the 5 minute, it would have showed you, hey, this is still uptrending, you still have time to stay in it. So hopefully, like Carolina, that kind of helps you with your question. Always have two different charts. If I see like a super trend here, at the same time I'm seeing a super trend here to get out like this, like let's say if I wanted to exit here and here showing you the same thing, there's no reason why you would want to stay in that trade. Whereas opposed to like maybe here, it was saying, hey, you can get out, you should get out of this trade. But here, there's nothing here that's saying that this thing is going to be going down. It happens like that all the time. But hopefully that helps you out. Aside from sticking to your strategy, that's a little bit of an indicator. So let me see if I can go over any other the questions that you guys had. Oh yes, Sky had asked about identifying runners like A, UPH we had talked about in the chat room. I think it was. Sorry, I was trying to go back through the thing and look. It was a couple days ago. Oh yeah, it was this day. Okay, yeah. So Scott had asked about. I don't think I traded AUPH or yeah, I didn't trade it. Or did I trade it? I don't know. I can't remember. I don't know. Go back and look at the Facebook post, guys. But anyways, his question was, how do you identify runners like this all day? Now, keep in mind, I think this thing was only it only went the alert for this only went off once. Ones like this, let me see if I can pull it up here. AUPH. The reason why it's much harder to identify ones like this is because of what I said earlier, the float. Well, it's double-edged sword. It's much harder and much easier. When something has a larger float, it takes a lot more to move it. And with those are like a good way to find trending stocks. If you are trading a stock that has a large float and it's trending, it's a good chance the trend is going to continue until it breaks like VWAP or the indicators show that it's going to be trending the opposite way. Those are really good, especially for like swing traders. So AUPH, well, let me see. I'm trying to find out where it went off on the alerts that day. XBIO, because I don't think I traded that one. I know it was alerted, but I was like, did I trade that one? I can't remember. I remember when we looked at it and we talked about it in the chat room. I was like, man, this is tricky to get in because we had talked. I said that's all the more reason to sit back and let it ride. Let it. You just kind of missed the boat on that one. There's no way to really tell because for one, it won't go off on the alerts because large caps like this, well, it's not really a large cap, it's just a bigger cap, won't have as much change in price movement because it takes more to move the price, if that makes sense. It's much easier to move 2 to 3 to 10 million shares than it is to move 100 million. This stock right here, AUPH, look at that, guys, has 117 million free float shares. So let me kind of let you know a little secret that I cover in the course as well too. Looking at the float tells me a lot. It tells me if the stock is going to move fast or if it's going to move slow. It's going to help me measure my risk to reward because I know how much I should wait for it to maybe pull back or not pull back. So the float is something I look at along with a few other things that I mentioned. When it comes to alert going off, I'm looking at float, I'm looking at this, I'm looking at that, I'm looking at that, I'm looking at that. Is it all fitting my criteria? Is it all okay? Now it's time for me to get into this trade, or I need to be plotting when to get in this trade. That's my thought process behind it. The float is very, very key when it comes to deciding and making decisions on the trade. Okay. So hopefully that answers that question. But how do you recognize something like this? Look at that float. Is it a large float? Is it trending up? The alerts aren't going to catch something like this until maybe it's like right here or right there, or has a sudden spike in movement, which will be very rare with a stock that has a lot of float, unless it's like some huge news or something like that. I mean, you'll see stocks like Tesla and Microsoft move like, oh, a big spike, but for them a big spike is like moving a dollar or two because it's so huge. This one's kind of medium, but the alerts won't catch nothing like that until something like this happens or something like that happens and it's hit a new high, because I believe this alert was actually a high day. And then you'd want to pull the stock up and look at it. Oh man, this thing is trending up. That looks great. And then as you're looking at the stock, you see, hey, this has a lot of has a huge float, has a huge cap. Well, what is the level two showing you? Are the orders moving quite a bit? Is there a huge spread? Is there a small spread? I'm not going to cover all that because again, all that stuff is in the course, but those are things you need to be looking at. If you know that and you're like, hey, this is a huge cap, spreads are big, spreads are small, this thing could possibly run all day. It kind of like happened the other day when I was like, hey guys, look at this stock, is going to be this one's an all day runner. And what it do, it ran all day. So it's easy, but it's easy to recognize them once you actually find them. It's much harder to find them because they won't trend up until they actually trend up. And when they trend up and they started hitting new highs and high of the days, and you see that, you're like, okay. But even then, it's not going to move much because look at this. This one moved like what, maybe a dollar or two. It didn't move that much from 14. I mean, the high of it was like 14, 18, and then $12. I mean, that's a good decent move. That's a safe play. This was a safe play if you can catch it in the beginning or even catch it at one of the highs, and it gives you no reason to pull back. even with the sell indicator, hey, it's still, even though the sell indicator is there, guys, it's not in bearish territory. If you don't know what bearish territory is and how to determine that, I'm not going to tell you. Go read or take a course, but it's not showing you that. So there's no reason to get out. And it's going to let you know that's still right. That might be a good time to actually enter in, try to catch it at a low point and ride it up to a high point. So that's how you kind of find stocks like that that run all day. Well, you don't find, but you can determine based on how much float is there, what the price movement is on level two. Still want to take into consideration how the market's moving, how the sector's moving, any catalyst that might be there, things like that. Okay. Um, let's see, John. I kind of hope that covered like the process of cutting losses. For me, the reason why I may cut a loss, like let's say with let's go back to AHPI. My thought process on cutting alert, depending on my strategy that I have, is going to be, is this going the direction that I expected it to go? If not, I need to start to consider to come out. Well, first of all, you should already have in your mind before you enter a trade, you should have like, hey, I'm done at this point. The stock, let's say the stock is moving, is it jumped up from $7 to $9. Okay, I need to know here before I even enter this trade that I need to get out at 650 or something like that. You need to have your exit point before you even get into the trade. Now, let's say you've been doing this consistently, and you keep finding yourself getting stopped out way too early. You're trading with too much of a size, and you need to probably scale back the positions you're taking, or you need to rechange that strategy. Because it could be times where your strategy is working fine. It's just you keep getting out because you're losing. You're not letting the range of fluctuation and dollar movements play out to the way it needs to for the strategy. So it could be a combination of those things. But that's how you want to kind of approach that. If for me, when the play starts to fall apart, I know that I've either entered in entering the trade at the wrong time, which typically I don't. I've kind of gotten much better at that because of my strategy. I know all this stuff, guys. Pretty much, John, with all your questions too, is going to boil down to you knowing your strategy and how it works. Because like I could do one strategy on a different type of trade. Doesn't mean my strategy doesn't work. It's just that I'm entering it in. I'm entering it at the wrong time frame. Um, and that just comes with like back testing strategies and stuff like that, and reviewing your trades, which you should be doing. I put links to great resources to be able to journal your trades, guys. So definitely take a look at that. Um, you utilize those. I mean, I used TraderView and EdgeWork for like the first 2 to 3 years that I was like starting to trade that thing. But before that, like the year or two before that, when I was trading, I wasn't using journal. I wasn't journaling my entries at all. And when I started journaling my entries and look back at it, man, it was such an easier way for me to change my trading style and adjust because I was able to look back and see like, oh, I was doing this at this time. I need to stop doing that. I need to stop doing that. I need to stop doing this. It helps out so much. You won't even know. And I hate journaling. I mean, I don't need to do it now because I've kind of perfected my stuff and I just repeat it over and over and over. But as you're learning and growing, you need to be journaling those trades and jotting that stuff down. Okay. So my thoughts process behind when I stock falls apart, make sure my risk management is key. And if I know for a fact that this is moving out of the ordinary as far as what I expect, just go ahead and cut the loss and move on. It's fine. I mean, you might feel like, oh, I wasted a day trade, or I did this, or I did that. So what? You gotta take losses. I mean, that's just part of the game. The trick is to just try to minimize them as much as possible. And if you find yourself taking loss after loss after loss, there's a few things you might need to revisit in your trading strategy or entries and exits. So hopefully that helps. Stop trying to use the indicators to base whether you should enter or exit a trade. Those are just there to help you decide. Not the indicators indicate, they never dictate. Um, if you find yourself like, this is a key thing for a lot of you new traders too. If you enter in a trade and you find it going, the moment you're like, oh, it's not going the way I think it's going to go, and you find yourself hoping that it just turns and comes back, that's it. The trade's done. It was never part of your strategy anyway. And let's say if by some random choice it does happen to go back up, oh, you're great, you're nostalgic. Guess what? It didn't. that yeah, you won, but you've ultimately lost because you never planned for the trade to do that anyway. Yeah. So keep that in mind, guys. Um, if the moment that the trade isn't going your way and you're getting confirmations that you should get out, and confirmations meaning the pullback might be more than you expected, get out. Indicators are not going the way you expected, get out. All of a sudden, some news of a shelf offering came out, get out. Things like that. That's how you find yourself. But don't just exit the trade to be exiting the trade because it went down a dollar or two. If you're like, oh, if you're worried about the stock going down a dollar or two and it's not part of your strategy, line up those shares. Stop trading with 100 shares. Trade with 50. Trade with 50 shares. Stop trading with 50. Trade with 25, and see if the stock does go your way. If you're still finding yourself getting stopped out, let's look at that strategy. Point blank. Period. Um, yeah, I mean that's pretty much all your questions, guys. If you have any more, let me know. Hopefully, this video helped you out getting into the thought process behind the trades, what I look for, what causes me to get in and get out, all that quick process. All this stuff is happening kind of fast in real time. But yeah, you can do all that when you know what to do and you got a step-by-step plan. I do this, I do this, I do this. I look at this, I look at that, I look at that. Execute. Get in, get out, get your money. We tell you what to look at the trade. We won't tell you how to trade it. You got to decide that. Okay. So, all right, guys, that's the end of the day. You guys taking up too much of my Saturday. I'm just kidding. You guys taking up enough of my Saturday, but hopefully you guys learned something. So until then, stay green. More stuff coming for you. If you got any questions, just message me, email me, need help. I'm here for you. But until then, guys, y'all have a great weekend. Stay green.